Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. So far, the Australian dollar is capped by the 71-cent handle, while the broad US dollar was unchanged around 96.74 as market participants look ahead to Wednesday's non-farm payrolls and Friday's US CPI for clearer guidance on the timing of the first Fed rate cut. Expectations centre on the modest payroll growth around 70,000k and unemployment near 4.4%, reinforcing a gradual cooling rather than a sharp deterioration, alongside US core retail sales and retail sales month on month and end of week inflation, which is a US core CPI. While also China's CPI on Wednesday also looms as a key risk given Australia's trade exposure. So looking at the technicals, we can see that the bulls are still trying to push through this 71.1530 level, and if seen, could see a rally on to 71.75. Just be a little bit on your guard in case there is a bull trap above 71, because there is some divergence here from the MACD and the RSI, and therefore could see a downturn back to 69 cents. But as the market may be data driven, keep an eye, as I mentioned, on the key US non-farm payrolls and also China's inflation data. Turning to the euro, the market is still paused as market participants sit on the sideline and waiting for the US data. Overall, though, technically, we are still in the risk of seeing a bull run that is on towards 119.5 to 120, and any weakness should find support around the lows of 118. While having confirmed the engulfing candle, another heavy day comes through and still bearish, with the risk of Japanese yen strengthening and the dollar taking more of a tumble, looks towards the level around 153 to 154, or even as low where I've outlined here at 151. As normal, the market always tends to try and recap itself in terms of a recovery, but heavy downward play continues to be witnessed, and therefore no bull trends in play, but more of a bearish factor, and therefore the broader call at present is at 151. Sterling, well, I'm waiting for this move to the upside, but there is still a little bit of uncertainty as soft US data and also UK politics offset the current rally. Nevertheless, we're in a prime position to see the market recover. So let's see if we can rally on beyond 136.5 to 137, 138. Wrapping up with commodities, well, the market is still pausing, and any pullback could still be deep towards that trend line at 4,600. But nevertheless, the technicals are firming. So therefore, I am looking towards 5,100. And there is much speculation for this year to reach 6,000. And a little bit of a mixed play when it comes to oil, but still keeping in this broad support level that could see a move anywhere from around 63.5 if we do witness a pullback, but the top side target could be up to as high as $66 a barrel. Well, that's a wrap. Thank you for joining me, and as always, look out for the interest rate report. I hope you enjoy the great start to the day.